On today's Hashi, I'm discussing last week's PCE report, what impact it had on inflation, housing inventory for the past week, as well as an update on pending home sales. Today is Monday, December the 2nd, 2024. I am Byron Lazine, and the Hashi starts now. Good morning. Welcome into the hot sheet. Let me know in the live chat which market you are tuning in from. I see Thomas Hilt there saying good morning from chilly Sarasota, Florida. Thomas, I am sitting in Naples, Florida. And while it's a little chillier, maybe than we are used to, I would caution you in saying from chilly Sarasota, Florida. If you look at the temps in the rest of the country, I'm going to the Northeast tonight, and that is not only chilly, but just downright freezing. Not looking forward to those temperatures, but I'm just thinking you're going to, you're going to aggravate some, like here we go. Puck stops here from Jersey Shore. I'm sure Jersey Shore is a little bit more chilly than Sarasota, but yes, it is. It is, I don't know, 60 down here in Naples or whatever the case may be. So a little bit chillier than it is accustomed to being. Actually, we're below 60. Wow, it is pretty crazy. All right. Good morning, everybody. Hope you guys had a great weekend and a excellent Thanksgiving holiday. Thanksgiving week, usually you will see activity drop. We're going to take a look at inventory, of course, as we do on every single Monday show. That being said, agents expect that the next couple of weeks activity to tick up before you get into the end of the year. So there's a lot of opportunity to move forward with the next couple weeks. There's opportunity even in those slow weeks. As you know, if you look on your local MLS, there are deals that happened yesterday. There are new listings that are already up this morning in everybody's MLS in the last 24 hours. So there is always opportunity. All right, let's take a look, just going rewind here to the end of last week when we had a PCE report. We want to track PCE data as it's one of the measurements to inflation to see where we are heading with that. Wall Street Journal says the Treasury yields and the dollar were little changed by unsurprising PCE data. So the headline is There we go. I should be back. All right. My apologies there for the disruption. This is a live show each and every single week. So, as the Wall Street Journal reported, and as the data came out at the end of last week, the 12-month PCE in October did rise 2.3% compared to 2.1% in September. But that was the consensus. Okay. The Wall Street Journal's consensus, as well as the market's consensus, was that we'd hit 2.3%. Core PCE, meanwhile, was 2.8%, also in line with forecast, also up from September's 2.7%. So PCE, core PCE, both up, but not surprising to the markets. That was in line with expectations. And so as things are not, if they're in line with expectations, despite showing an uptrend here for October, that means that the market's not going to overly react. Okay. I see that here. Personal income increased 147.4 billion, and disposable personal income increased 144.1 billion, 0.7% and 0.6% for the latter. So when you see in line with expectations, you don't see a huge movement in things like the 10-year, which we're paying close attention to. And we go over the last 5 days. In fact, we've seen, an easing from the 10-year from 4.3 now to 4.228 to start the week here. A little bit better than where we've been trending at for the most of the last 30 days, which is up over 4.3 and closer to 4.45. The last 3 months, if we take a look at that, we're still not down to 3-month lows, which were down at one time below 3.75. Could we get a little late season push downward on the 10-year? If we just kind of go back out, 1 year, when we do see these, these peaks, we does follow with some low decline. So are we, poised for one of those drops here on the 10-year as we've seen in the past? That'll obviously remain to be seen. We'll continue to collect what's going on with inflation as we lead up to the next Fed meeting. They're collecting all of that data, of course, to make a decision in 16 days, which is when the next Fed meeting will take place. Right now, there's a 62% chance after the data from last week and a long holiday weekend that the Fed will reduce another quarter point. We've had 3/4 of a point reduction since they started cutting rates. Again, well below the expectations going into the beginning of this year was that we'd have about 7 cuts. Remember, everybody was talking about the year of the fives on the 30-year fix. They're not even talking about that now in the projections for another 2 years. If you caught up with any of last week's hot sheet, you know the projections that I'm referring to. And that was based on 7 cuts coming this year. The Fed has stated they're going to be cautious on those cuts, and we'll see what happens here going into 16 days from now, the next Fed meeting. All right, let's take a look, as we always do, on what's going on with inventory here for the past week. We'll get into new listing data as well. This is all broken down by Altos Research, and inventory, as expected, over the last week, as you typically would see in a last week of November due to seasonality, we have seen inventory fall. Okay, inventory fell from 719,000 to 706,000 over the last week. And that is now showing that seasonal decline, which again, in normal years, if you look at 2017, 18, and 19, that decline starts much sooner than it did this year. We were still on the incline, into November, where previous normal years, you start getting that decline as early as late August. But we're from 719,000 to 706,000, still holding out active inventory up over 700,000. Maybe we get a little pop back now after the holidays as we look and see what happens this first week of November. That'd be great. As much as we can hold up over 700,000 as we get into the end of the year, inevitable seasonal decline, the better. The same week last year, we're only at 555,000 for inventory, much healthier place across the country on inventory right now than we were last year. Our peak for this year was 739,000. We're 27% more than last year. So in a pretty improving spot here as it relates to inventory. New listing data, of course, in a holiday week is typically down. Now, 2000 and new listing data for last week was 51,800. And when we look at the previous weeks, we had 28,000 and 28,000 respectively. So, now that we're out of the holiday, what is the week after going to look like, in comparison? This is really interesting here to get 51,000. We had 53,000 the week prior. This is well above new listings for the holiday week in comparison to last year. We'll take a look at, what that means going into next week, and we'll see if the decline comes the week after on new listings. But, a really big pop on new listings comparatively year over year. That's a great sign that there's still demand from sellers to get their house on the market despite what's going on here seasonally. Price cut percentages were at 38.7% versus 39 last year and 43 in 2022. So price cuts are improving even while we're seeing more inventory than we've seen those previous years. Okay. Interesting to note that as well, that less people are cutting their price versus the last 2 years, even though we have more inventory, more competition, more homes available on the market. So sellers are not in a vulnerable position here where they need to cut price. Sellers are starting to get maybe more accustomed to what normally has been a time on the market, not 2 hours, but 2 to 4 weeks might become more customary. We mentioned last week we had mortgage application data that was up over 2023 level again. So now we're seeing multiple weeks moving forward of demand showing improvement. Still, we're near 1995 levels on mortgage application, but any improvement we will take. We're going to get into pending home sales here with NAR in just a minute. If we just take a look at Altos research on total, we're taking a look at pending home sales from NAR perspective, which tend to be the number that most reference. But if we look at Altos research, we've got 317,000 homes in contract, according to Altos, which would be 7% more than single family homes when you look at a year over year, more than last year. So pending home sales are improving, not at the rate that inventory up over 25% year over year, and pending homes being at 7%. So pending home sales not keeping up with the gains on inventory, or really even those gains that we saw this week here with new listings. So there you go on your inventory update. Now let's take a look at pending home sales, because this will tell us really how much demand maybe we can expect coming into the spring when more buyers enter the market. Are things improving on pending home sales? Remember, we're trending towards the worst year in existing home sales since 1995. Okay, that's been widely reported, even in the Wall Street Journal. That's been reported. So if we start to see pending home sales maybe improve now in these late fall and early winter seasons. Of course, we're getting pending home sale rear view mirror. We're going to take a look at October here in a second. Would that mean that we're going to see a better spring market and improvement off of some of these bottom numbers that we've seen here over the last 2.5 years in a real estate recession? Pending home sales in October did go up month over month for the third straight month. Now we see an increase in pending home sales. October up 2% month over month over September. The index is coming in at 77.4, well below 100, which is a higher level of activity relative to 2001. It's kind of like, the baseline there. So we're still well off of 2001 activity, which is well before the run up that happened with the mortgage crisis of really when you saw 04, 05, 06, the crazy infusion of those mortgages. Midwest is up 4%, while the Northeast is up 4.7%. Those are the two leaders month over month regionally. Northeast, though, lagging well behind the national index at 68.7, while the Midwest is right on the money there at 77.8. South saw 0.9%, almost a full point up on month over month pending home sales, coming in at a strong index of 90. So still seeing a higher level of activity in the South, Southeast regions for home buyers. Still a strong migration trend into those states like the Carolinas, despite North Carolina's issues that they're faced with right now. Georgia, of course, Florida, and Texas, and really that whole eastern seaboard experiencing a strong migration. The West has the weakest index at 64.1, but did see a month over month bump at 0.2% to the positive. Lawrence Yun, one of his monthly, comments here, says that home buying momentum is building after nearly 2 years of suppressed home sales. Okay. Those suppressed home sales brought us to the lowest level since 95. Even with mortgage rates modestly rising, despite the Fed's decision to cut short-term in September, continuous job additions and more housing inventory, bringing up more consumers to the market. Look at this. Century Lockbox openings rose 7% in October compared to last year. That's an interesting data point. How many Century Lockboxes are out there is a whole nother conversation versus Supra or some other lockbox. I think Supra's got more than Century, but I don't know. Maybe in your market it's more Century. But 7% there. And looking at these regional numbers here, again, the Northeast and the Midwest grew the most. And it's encouraging to see contract signings rising in all major regions. Added June, more notable gains from a year ago occurred in the Northeast and the West. The record high stock market is providing a boost for upper end home buyers. Okay, there you go. These are good early indicators for upcoming closings. So we should see obviously 3 months now of pending home sales moving up. We should see those existing home sale numbers maybe close out the end of the year here. We're on track to be under 4 million. Maybe we get over 4 million. And, some of the more bullish, like NAR has existing home sales coming in at 4.9 next year. Seems like a huge stretch. If we got 4.5 million off of 4 million this year, that'd be a huge bump. But these should be early signs that we should see existing home sale numbers year over year, seasonally adjusted, start to improve. All right. With improvement on sales, we need to see a continued improvement on the 30-year fix. In the last few days, in the last week, we have seen an improvement. Now at 6.88 to end the week last week. We'll see where we come in as we move into this week and see what the numbers come in here on this Cyber Monday. By the way, Cyber Monday, I would imagine we've got some kind of deal with BAM. Haley, why don't you grab the Black Friday link? I'm hoping that's extended, but use the Black Friday link for those that are not in BAMX. Of course, BAMX, you get access to our show notes each and every single week, or every single day, rather, that we do this show. Every week, we drop done for you content inside of BAMX. These show notes, I'm hearing so many of you guys using these in your communications with your database. You have the most relevant information. We sift through all the nonsense that you need. You can copy and paste this stuff along with all of the charts. Like just today alone, there are 14 charts that have been uploaded from this show alone inside of BAMX, along with the show notes. It shows you exactly how many charts for each category. We had 9 charts in the housing inventory category, for example, that went inside of BAMX. Let alone every Friday we do done for you content, which includes email, video, as well as actual posts that you can post in with your social media. So use that link down below to get into BAMX on the Black Friday deal here on this Cyber Monday. And again, starting the week here at the 6.88 on the 30-year fix. We'll look for some improvement there. BAMX members, again, don't forget you get access to the Zudilio platform to help you get more listings, all included inside of your BAMX. All right, there we go. Let's kick off this week strong. There'll be a uptick in activity over the next couple of weeks, as there always is. I referenced that earlier in the show, but just take a look at this one chart here in front of you in just a second as I pull it up. As we look at new listing data, we didn't see the downfall of the week that, the Thanksgiving week on new listings. And what do you usually see? You see an uptick after that Thanksgiving week. So what is our uptick going to look like over the next couple weeks for new listings? It happens every year. You get a bounce up before the last week of December, and that seasonal drag down on new listings. So take advantage of that, agents, over the next couple of weeks, as those opportunities are there in front of you here in early December. All right. Hope everybody has a great start to the week. We'll see you back here tomorrow on the Hot Sheet live at 9:30 on the East, 6:30 on the West. And you know the deal in between. Until then, of course, toodaloo.